Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be looking at The Poor Man's Guide to Market Assessment. This is part of Howard Marks's book, The Most Important Thing. And it's a checklist sort of thing, or some sort of document which helps us at home to figure out where we are in the market cycle and maybe what we can hope to see in the future. Maybe not a prediction, but rather an indication of what may come in the future. And it's important to look at it. But before we examine the checklist, I guess it's important to talk about the pendulum structure of a market, where, like a clock's pendulum, the market swings from undervalued to overvalued, and it rarely sticks in the middle. It's a very short period.
The maximum time is spent at the end of the pendulums.
Yeah,
before it switches.
Yeah, most of the time is spent on either side of the equilibrium point. Most of the time, you're either on the left side, or that is the undervalued side, or the right side, which is the overvalued side. Very rarely are you in the fairly valued side. And the thing is, this pendulum structure of the market works just like the pendulum of a clock. Like clockwork, you do know the pendulum will swing the other way. And very similarly, regardless of how long the pendulum takes, this clock doesn't run on our time, it runs on its own time. And when the pendulum does decide to swing the other way, it will, and no man or woman can stop it.
But the big difference is, either side of the pendulum that is differently timed compared to a clock. A clock in physics will spend equal time on both sides of the equilibrium point.
Yes.
But in markets, in the equilibrium point, the pendulum can stay on either side at various amounts of time. It doesn't mean if we had a bull market for 10 years, we'll have a bear for 10 years. The bear might just last for a few months.
There's no, physics doesn't apply.
Yeah, it's not physics. Yeah. So don't immediately think, okay, when we enter the bear market, we'll be sitting around there for years to go.
Yeah, that's not, the market could just lift off immediately.
Yeah.
So that being said, the reason I'm bringing up the pendulum structure is because the checklist is basically telling you where the pendulum is standing. So it's not a perfect pinpoint accurate point to say that the market is at this angle, this degree of the pendulum. It tells you that it's in this general vicinity. And I think that's enough for most of us as investors, at least retail investors, to take a call on what we should be doing, whether we should be fearful, whether we should be greedy. Like that one quote which goes by Warren Buffett, which is, be fearful when others are greedy and greedy when others are fearful. A lot of you can rightly ask the question, when do I know when others are being greedy? When do I know when others are being fearful?
And do realize this is like 12 blind men trying to describe an elephant when each of them only gets to touch one part of the elephant.
Yeah.
So each one has a different experience. That's how markets can be. We are completely transparent in what we're saying, that yes, these are guidelines. This doesn't mean they are hard facts. You can't hold this as things to say, okay, I'll invest based on this. This is just supposed to give you an indication of seasoned people, what they've been doing in the market, like Howard Marks, and kind of give you an insight into how they think. And based on this, you have to form your own methodology to deal with your own risk and your own emotions. Because markets, in the long term, of course, will grow. But in the short term, it can be very painful if you're not aware of this.
Right. So that being said, let's look at the checklist. I'm sure our editor Rupesh will put it up for us. Yeah, so let's get into it.
Sure.
So the first point, or rather the first column, is the economy. Howard Marks asks us, how do you think the outcome for the economy looks? Vibrant or sluggish? What would you say currently about India today? Or the US even?
I don't know about the US. I'd say India right now is in between vibrant and sluggish.
Okay, somewhere in between.
Yeah.
The outlook for the economy, does it look positive or negative? Where would you think you put the mark?
I wouldn't say it's negative, but it's not superbly positive.
So that's the thing about this. This is not your outlook. It's what other people's outlooks are.
Yeah.
So what do you think?
Indian media is saying everything is plus.
Okay. So the outlook is generally positive.
Yeah, and it's vibrant.
Yeah. So another question which Howard Marks asks us is, how do you think the lenders are currently in the market?
Oh, very eager. At least to me, at least. I get calls for borrow money from me in all kinds of form. I get mails, I get SMS, I get phone calls saying, please borrow, whatever you want, you can borrow.
Yeah, and they're saying unsecured loans.
Yes.
We'll give you the loan.
Yeah,
please.
credit cards are up to wazoo, as they say.
So lending, let's say, is on the eager side. So the way I'm going about this is, if it's on one side more than the other, I'm just going to go with that option because this is just a
correct. As we said in the beginning of the video,
it's a back of the envelope calculation, more than even less than that. I wouldn't even give it that credit. I'd say that it's more to gauge where the market is.
Yeah, it's like looking at the sky in the clouds and saying, okay, will it rain today or not?
Yeah.
We don't have any other instruments to measure. We don't have a barometer.
Yeah.
We don't have satellite information. We don't have anything. Just sort of the habit of going and looking at the sky and the time of the day and the time of the year. We say, is it going to rain today or not?
But surprisingly, this can be quite effective to do.
Yes. But it depends on how your experience is, which is the most important part.
Yeah.
The more experienced you are, the more this will be easy for you to do. If you are very green into the market, this is the first few months in the market you're participating, this list will be very ineffective for you because you'll be unable to really gauge this.
Right. So the next point that Howard Marks asks us is, are the capital markets loose or tight? I think they're on the looser end of things, in the sense that stocks are going up. People are willing to buy.
Yes. And everything, IPOs you see.
Yeah.
Everyone wants to go to an IPO right now.
Yeah. So I think the capital markets are quite loose.
Yeah.
So it says, are the terms of lending easy or restrictive? I think
very easy.
Very easy side.
Yeah. Anybody can borrow.
Anyone can borrow, and I think things are on the easier side of things. Are the interest rates low or high? This is a tough one.
I would say interest rates are high compared to historical Indian interest rates.
Yeah. So interest rates are on the higher end of things.
Yeah.
So let's mark that off as high. And the spreads narrow or wide? I think they're narrow.
Yeah.
Because we saw how bond yields are quite low because everyone's looking to get the higher yields.
Yes.
So I think the interest rate spreads are quite low. Okay, this is interesting. So under investors, we have three pointers. So let's go one by one. Are investors more optimistic than pessimistic currently? Optimistic. Are they sanguine or distressed? Sanguine, for those of you who aren't aware of the word, it basically means relaxed or happy. So would you say investors are more happy or distressed?
Happy.
Sanguine, right?
Yeah.
Eager to buy.
Yes.
I think so. Okay. And finally, he asks us, we move on to the next set. Asset owners are happy to hold. Are we rushing for exits?
No, they're all happy to hold.
Yeah. Even though we had that small blip in the middle, regardless of that, I think people are happy to hold on to what they're holding. Sellers, are they few or many?
Few compared to the buyers.
Yes. Markets, are they crowded or they starved for attention?
Extremely crowded.
Everyone you know probably is telling you or talking about the markets and saying this stock is doing well, that stock is doing well. I recently had a friend ask me about a certain stock, and I was shocked because that friend knows nothing about investing. And I was wondering, where did you get this information from? Why have you suddenly started asking me whether the stock will do well, that stock will do well? So that's there. And funds. Okay, this may not apply for us because we don't have hedge funds and privately managed funds in India. But let's skip that one. New ones daily, or only the best can raise money? I think definitely the new ones daily.
Everybody's raising money.
Everyone's raising money. General partners hold all the cards. Okay, this is, I guess, not applicable to us. We're not fund managers. Recent performance, has it been strong? I would say so.
Yes.
If we look at the S&P 500, for example, the S&P 500 over the past year has gone up by over 20%. Yes. I think that's a pretty good return which the market has posted.
Yes.
Then we go on to asset prices. They're definitely higher.
Yes.
Because the Schiller ratio, PE ratio, tells us at 36, which is even higher than the 2007 boom, which happened. It's even higher than that. Last time we had such high Schiller PE ratios was in 1999 during the dot-com bubble. So, yes, asset prices are high. Prospective returns are on the lower end of things, I'd say.
Yes.
Risk, how would you put that?
It's through the roof.
High, okay. We talked about Nvidia and we talked about and this is not just about Nvidia, even companies like Apple, Microsoft, Amazon, they are on the higher end of valuation.
People in the market are greedy, right?
Yeah. So popular qualities, aggressiveness and broad reach, or would you say caution and discipline?
Aggressive, man. They want to grab everything and anything for sale.
Right.
Don't even think twice.
So, okay. Now that...
Like a company which had nothing to do with AI, just had the name AI attached to it and they started going through the roof. Remind me of the .com.
And Rupesh would have put tick marks on where we, thought
only interest rate in India was
high.
Yeah.
Apart from that, I think we're definitely on the left side of the
graph.
So you can look at the tick marks. I'm sure Rupesh would have marked it out for us. Let's take a review of it now. It's on screen. So what we see here is that we've been on the left side for most of it. And let's read out what Howard Marks says on page 131. He said, here's a simple exercise that might help you take the temperature of future markets. I have listed a number of market characteristics. For each pair, check off the one you think is most descriptive of today. And if you find that most of your check marks are on the left-hand column, as I do, hold on to your wallet. So what do you think about this assessment? And what do you think we can gain from the fact that we've checked most of it on the left?
I agree with hold on to your wallet. But the problem is that advice is true for someone who's absolutely green like your friend. But if you are a little more seasoned, like my brother is, and you see value in specific pockets in the market, specific stocks in the market, specific times shares are looking favorable, then you should consider. So if you looking at it at a granular level, yes, there's still some diamonds lying around. But if you're talking about if I'm going to take a bucket of this market, I would avoid.
Yes, and like you said, if you're a value investor, then it doesn't matter what the broad market is doing, apart from a perspective of just knowing where things are going.
Yes.
But if you're not a value investor, if you're a normal person looking to put some money away for the future, you have to understand that you shouldn't get taken away by the wave of positivity. It's not to say that we're doomsday analysts, pessimists. We all want the market to do well. We all want to make some money off the market. But there are time and place to enter the market. And when the tide is high, you generally have to be a little more careful. You don't want to get drowned. And Howard Marks has given us this checklist because we get to take the temperature of the market, the pendulum, as they will say. The pendulum is definitely on the right-hand side of the equilibrium. And at some point, the pendulum may decide to swing back, or it may decide to stagnate for a while, leading to negative real returns because inflation keeps going up, but the market doesn't move. So either way, there are multiple opportunities for us to not make as much of a return as we would have otherwise if we had taken caution, like Howard Marks urges us to do. And I hope that all of you at home also take a photo of this checklist, print it out, and maybe do it yourself and write out a reasoning for why you think you're picking the one which you're picking. And if you find that your checklist has it on the left-hand side of the paper, most of them, then I would say that you better hold on to your wallet for broad-reaching investments and just focus on small pockets of value. And otherwise, I think indexing is something we can still do, regardless of
long term. Yes, long term. If you're investing for more than 10 years, don't bother with all this list.
Yeah, but this is for the people who want to take a gauge of where the market is standing, and I think this was an interesting perspective to look at.
Yes.
So that being said, thank you for joining us on today's video. If you liked it, please hit the like button. Please subscribe if you haven't already. Hit the bell icon to get notified of when we upload our latest video. And finally, if you have any opinions or comments you'd like to express, please leave them in the comment section below. That being said, thank you for joining us on Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.